Verizon reported earnings before the market opened on Monday, and results were okay. I think this is one of those cases where Verizon's kind of steady as you go business continues to churn out cash, continues to do relatively well, but it's really the nuance in the business that we want to look at. This quarter, I'm going to talk about price increases and momentum in the fixed wireless business. That's the broadband business that works over 5G. So you just plug a box into your wall and you have broadband connection. That's doing really well for Verizon. Bundling is also doing relatively well. But there are also some things that aren't working particularly well. One of those things is their discount business, which continues to decline. So that's not necessarily taking away from their profitability, but it is impacting revenue. So I'm going to go through all the numbers today and kind of give an overview of not only this quarter, but what to look for throughout the rest of 2024, because management continues to say that the back half of the year is when cash flow is really going to start picking up, and that's when they can start buying back debt. And ultimately, that is the biggest worry that I have with Verizon, is that this company just has too much debt and isn't generating enough cash right now. So I'm going to go through exactly what we learned today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First, let's look at the market's reaction, because it was actually pretty positive early in the day and then really fell off a little bit later. You can see here that shares were trading a little bit higher for the day in the first 10 or 15 minutes or so, and then just kind of fell off a cliff, and now we're down about 3.5% for the day. So I'm not really worried about the market's reaction on a day-to-day basis. And if you pull back to the rest of the year, shares are still up just slightly for the year or so, and really hit this low back in October. So it's not all bad news, but let's get to the results. At a high level, we had earnings per share of $1.09 on an adjusted basis. That was $1.15, beat estimates by a little bit, but revenue fell a little bit short, up just 0.2% to $33 billion in the quarter. Total wireless services revenue was up 3.3%. This is what you want to see growing. You don't necessarily want to see Verizon selling more phones, because they typically lose money on those phone sales. You want to see them increasing wireless revenue. So that's positive that was up 3.3%. But they did lose retail customers. That was a little better than a year ago, but down 68,000, and added customers in the business side. From a broadband perspective, additions were 389,000, included 53,000 fiber optic customers, and they continue to add fixed wireless. I'll get to that in just a second. The other thing that Verizon did was confirm their outlook for the full year. They expect wireless services revenue to be 2 to 3.5% higher for the year, adjusted EBITDA to grow 1 to 3%, earnings per share of $4.50 to $4.70, and CapEx of $17 to $17.5 billion. Their presentation puts some of these numbers into a little bit more context. You can see that the fourth quarter was actually really good for postpaid additions on the consumer side. So they had a bunch of promotions that were really successful. New iPhones came out. So that can be a big draw for a company like Verizon, at least short term. But we went back to declines in the first quarter. But you can see those were obviously a little bit lower than they were a year ago. One of the reasons that this was relatively positive is Verizon increased prices slightly in the first quarter. So according to management, that was received pretty well. They also continued to add business customers. So this is the trend that we've been seeing. This is the fixed wireless and other broadband additions that I talked about earlier, 389,000 total. But look at this fixed wireless additions, 354,000. Now, this is one of those businesses where it was always communicated that this is going to be limited in how quickly it could grow and how big the business could get overall. But they continued to add 300,000 to 400,000 customers per quarter. So this continues to be a tailwind for the company. Here's those revenue numbers that I talked about earlier. And again, this continues a trend where overall revenue growth is maybe not all that impressive. But if you look at services and other, that is growing pretty significantly to 27.2 to 27.6 billion. That means that there's less hardware sales, which is actually positive for Verizon's bottom line. A little bit confusing there, but this gets to the razor blade model. They're basically subsidizing hardware sales to get people to sign up for their subscription services. And that's really ultimately where they make their money. That's why you want to see this 3% growth on the wireless services side. This is where things were a little bit concerning for me. Cash from operations, $7.1 billion. That's down a little bit from a year ago. But capital expenditures just dropped like a rock, and this is going to be about where we're going to be for the rest of the year. Remember, $17 to $17.5 billion in CapEx expected for 2024. So that gives you cash flow of $2.7 billion. Here's the problem. That's not even enough to pay the dividend. So that means that debt is not going to be going down significantly because you need to use your free cash flow to pay dividends. So that's generally the concern that I've had for Verizon, is that they just aren't generating enough cash to both pay the dividend and pay down debt. But management did talk a lot about that profile should be changing in the second half of the year. A few highlights, and they talked a lot about these on the conference call: scaling fixed wireless access. That's the broadband, the fixed wireless broadband that I talked about earlier. Also private networks. So this is going to be networks for businesses or locations that are limited on who they can access, or you can make them public. So that's a growing business for them. And then they also talked a lot about enabling artificial intelligence at scale. This is one of those kind of strange things, but Verizon could actually be a pretty big beneficiary of artificial intelligence because of their position in telecommunications. They're making the connection between the smartphone, the device that you're going to probably use for artificial intelligence, to the data center. And that's actually a relatively long connection. That's why sometimes these AI calls take a little bit of time. But if you can move your access point to the edge, or to basically the base of a cell phone tower, for example, that's going to be an advantageous position for a lot of AI companies. That could be an opportunity for Verizon to grow. So keep an eye on that. I don't think that we should buy Verizon as some sort of AI play right now, but this is one of those things where they said that they're going to get momentum from that in the future. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So this is kind of a steady as you go quarter for Verizon. Not a lot to love, not a lot to hate. And this is one where I just continue to hold shares and just collect the dividend. What I'm looking for in the second half of the year, though, is going to probably be more important to determine what I'm going to think about shares and whether I'm going to buy or sell in the future. And that's going to be, can they actually make this transition to spending less on CapEx and actually growing some of these opportunistic businesses like fixed wireless access? Can they raise prices and not have a significant amount of churn? That's what's ultimately going to drive greater free cash flow, and free cash flow that's in excess of the dividend that they're paying each quarter. That's really the challenge, is that Verizon is paying a very significant dividend. The yield right now is 6.8%, but that means that debt on the balance sheet, there's just no money to pay that down. Management has talked about they're gonna start to pay down significant amounts of debt in the second half of the year, but we just haven't seen evidence that they even have the capacity to do that yet. So maybe a little bit of green shoots there as far as generating enough cash to do that if price increases are received relatively well. And I would look at this not only at Verizon, but also everybody in the industry. Does everybody kind of play nice to get to a point where they can generate more revenue and more cash flow as interest rates go up? Because that's going to be the headwind that all of these telecom companies and wireless companies are going to face. They all have debt. They're all going to have to pay off, that they're all eventually going to have to refinance at higher rates. And that means they're going to have to generate more cash flow. So that's going to likely have to come from increased prices. But overall, kind of a ho-hum quarter for Verizon. Like I said, I'm just holding on to my position. But what do you think about Verizon's quarter? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.